This episode is brought to you by Mortgage Workflow Partners and the Mastering Encompass series, both for users as well as administrators. You can find out all the information about it over at masteringencompass.com. Also, if you'd like to check out what we're doing on YouTube, go ahead and subscribe to the channel using the @MasteringEncompass handle. And make sure you stay up to date on all the information, not just with podcasts, but also video content that we bring to you as often as possible. Now let's get on to the episode. Hey everyone, Larry Bailey here, bringing you another weekly installment of the market update. Today is August 26, 2024. Here's what happened last week, starting with August 16th, and this is going to be really important information to understand. We probably are going to see some rate cuts from the Federal Reserve. We're going to go into the stories that happened last week. Let's get into that right now. The first one is Powell confirms, like I just said, that the time has come for policy to adjust, and that is a direct quote. The next story is existing home sales snaps 4-month losing streak. The next story is new home sales surprise to the upside in July. And then we get into jobless claims sample week, explaining all that is. Now, I've only been in banking since 1993 in terms of the mortgage sector, so there's a lot of great information in here, and I do expect that this information will cause, number one, rates to be reduced from the Federal Reserve, and then number two, if you haven't already started to see less than 6% from your mortgage lender, let me know in the comments why not. Tell me what their current rates are, what's happening with you, because I am starting to see applications come in from different lenders for different borrowers for different circumstances, well under that 6% mark, which is huge, especially for folks who ended up getting a house earlier this year or later last year, somewhere with rates higher than 7%. So let's get into the first story here. Powell confirms that, quote, the time has come for policy to adjust. So the Fed Chair Jerome Powell spoke at the Jackson Hole Economic Symposium on Friday. His speech was definitely dovish, which confirms back as of September 18th a rate cut. We'll see what happens there. Powell said, quote, the time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks, close quote. So while he was non-committal on the actual size of the cut, the market liked the confirmation that the policy is changing and will begin to be less restrictive. Powell explained that inflation has declined significantly, and we've seen that at least in the numbers, not so much always at the register, but things are changing. It just may not be as dramatic as you'd like it to be. And to continue, his confidence has grown that inflation is headed towards that 2% path. So I want to talk about this for a second, because I think a lot of folks are still stuck in this idea that prices should go back to the way they were, and that's just not realistic. Prices always go up. That's just the way it is. Now, you might have certain circumstances where prices are higher and then they drop, right, for some reason, whether it's an abundance of supply or just some kind of special sale. But historically, gang, over the years, prices will always continue, except when we're in an absolute recession, which is what we don't want if we can help it. And so this idea of prices going up no more than 2%, the idea here is that wage growth outpaces inflation. So even if prices for something were $1 last year, now they're $1.02 next year, hopefully you're now making $1.50 in that comparison, so to speak. So he also said that the upside risks to inflation have diminished, while downsides to the risks of unemployment have increased. And we've seen that over the last few weeks, really last few months. Clearly, the Fed is more concerned with labor market versus inflation right now. Remember, they've got a dual mandate. So on the labor market, Powell said that the conditions were less tight than pre-pandemic, where inflation was below 2%, meaning that labor market would not be a source of inflation. So the bottom line here is the Fed futures, which is what prices in this idea of will the Federal Reserve increase or decrease rates, this case decrease. So now it's priced at 100% change of 25 basis points, which is one quarter of 1% in September, while 33% chance of 50 basis points, which is a half of a percent. The market's putting 73% chance of 100 basis points by year end, which would mean 50 in one of the next 3 meetings. If that was to make the case, the market's also pricing another 125 basis points in cuts in 2025. which would be 225 basis points, also known as 2.25%, in total between this year and next year, which would bring the Fed funds rate down to around a range of 3 1/8 or 3.125, which would still be above inflation. Okay, we'll see. There's a lot of predictions here, and you're going to probably see a lot of movement, especially with what's going on here between now and September 18th. Next story is existing home sales snaps 4-month losing streak. So existing home sales, which measure closings on existing homes, rose 1.3% in July to be annualized at a pace of 3.95 million units, which was in line with market estimates and broke a 4-month losing streak. Sales were down 2.5% year over year. And if you're listening to this on podcast, thank you very much. If you want to check us out, you can check us out over on our YouTube channel and subscribe, please. That's using Mastering Encompass as the handle, or you can check out this video also by going through mortgage.community, wherever you'd like to go. And on screen, we see this existing home sales image, and it talks about the median home price, which is, again, the middle between the highs and the lows. It's $423,000, which is down 1% month over month, but is also up 4.2% from last year. And we see inventory also on here, and the number of months supply and how many days on market. So 24 days on market as compared to 22 in the previous month. So the story here is the report is likely measuring people shopping for homes in May and June when rates were above 7%. Like I said, rates have come down since. And again, I think you should be seeing less than 6% from many lenders, maybe not all, but many lenders. Which we believe will lead to more sales in the upcoming reports. And really what it's talking about is affordability. Right? More people can afford homes, typically speaking, at a lower interest rate than a higher interest rate. It's pretty mathematical in that assumption. Inventory also increased 0.8% month over month to 1.33 million units. Inventory is now up 20% year over year. But it is important to note that there is a seasonality to the inventory, and we'll always see inventory move up and peak around this time of year, which again is right before the beginning of fall. We'll usually see inventory peak up because people want to sell. They think they can get a good price, and because people typically with families, they want to move to a new house right before school years start. So right now it's August, right? It's the end of August. Most schools in the south, at least, of the country have started. And here in the Northeast, they'll be starting next week. So it's probably going to start to fall inventory because people will pull their houses off the market and they'll try again in next spring. Okay, so based upon the increased pace of sales, even with the inventory increase, there's still a 4-month supply of homes, which is down from the 4.1% in the previous months and below a more normal market, which is about 4.5 months supply. Homes remained on the market for 24 days on average, up from 22 days in June, but this metric has been trending lower. In May, homes were on the market for an average of 24 days, less than the 26 days seen in April and 33 days seen in March. We also saw 24% of homes sold above the list price, down from the 29% in the previous report, but showed that there were still bidding wars in about quarter of the homes sold nationwide. So bidding wars are still part of that process. The median home price, $422,600, was down 1% from last month, but up 4.2%, as I had said. First-time home buyers accounted for 29% of sales, which was unchanged. Cash buyers accounted for 27% of sales, down from 28% in the previous report, while investors made up 13%, down from 16%. I see this shift. You know, a couple of years ago, actually about 3 years ago, there was a huge push for investors to get into short-term rentals, STRs, as well as long-term rentals, but more short-term rentals. And they took up a big part of the market share. There's also a ton of corporate buyers out there. And all this is driving, in some locations, prices higher because of the lack of inventory and also cash buyers. So it's interesting to see that cash buyers are down. It's also interesting to see investors buying homes are down. To me, at least, that's interesting. So the bottom line here is the number of closings increased in July, and some of these intervals with report point to demand remaining strong even in the face of elevated interest rates, which I said just are starting to go down. Homes remain on the market for a short period, an average of 24 days in July. And again, on the market just means that they're no longer available for purchase. That doesn't necessarily mean they closed. The next story here is new home sales surprises to the upside in July. New home sales, which measures signed contracts on homes, rose 10.6% to 739,000 unit annualized pace, blowing out the estimates of a 1% rise. Like they were expecting 1%, they got 10.6. Additionally, June was revised significantly higher, causing July's gain to appear lower. When considering this revision, sales actually rose 20% from the originally reported figure in June, which is just insanely strong, like insanely strong. So there were 462,000 new homes for sale at the end of July, which was down from a downwardly revised 467,000. It's like 5,000. Who cares? At the current pace of sales, there were 7.5 months supply, which was down from 8.4%. So the part that's confusing to me is, again, this is where you've got new homes versus existing homes, those kinds of things. And so, the idea is different homes sell at different rates of pace. And so if you're getting confused on these numbers, I appreciate that. It's important to recognize, though, that, however, out of the 102, so for new home sales, out of the 102,000 that are completed, when looking at the pace of sales versus the homes that are completed, are not completed, they're only 2.2 months supply, up from the 2.1. So again, where I just said 7.5 months supply, it's really only 2.2 because those are the houses that are completed. These numbers get really, really dumb and confusing. So I'm right there with you. If you're confused, you're like, wait, what did he just say? This means that 360,000 homes are either started or under construction. It's unclear how many of these homes will actually make it to the finish line, as financing and carry costs are very high. The median home price was reported at $429,800, which is up 3.1% from the previous month and down 1.4% from last year. It's a significant note. So sales, new home prices on average are going down, and that's an interesting thing. I think that it's another metric, another trend line to watch. The bottom line here is, unlike the existing home sales counterpart, which measures closings and are likely represented buyers shopping for homes in May and June, this shows people are signing contracts in July and shows the demand price is picking up as sales and rates have moderated. And this report does not include the further rate drop we've seen in August, and which will likely lead to continued strength. Yeah, I'm really interested to see this report next month because where interest rates are, especially with builders. Builders do a lot of really fancy stuff with financing because they've got a lot of cash. And so they can do sometimes temporary buy downs. And I've seen more and more builders doing permanent rate buy downs. I wouldn't be surprised if somebody's down at 5% or maybe even some cases in the 4s in a not too very distant future, with builders putting a ton of cash into permanent rate buy downs to get more people in their homes. I wouldn't be surprised. Jobless claims sample week. This is the next story. So the initial jobless claims, which measures individuals filing for unemployment benefits for the first time, rose 4,000 to 232,000, but this figure is still lower than some of the readings last month. This applied some pressure to the bond market and shows there's less firings happening, but a lot of the other labor data is showing weakness. This week's report encapsulates the sample week that the BLS, Bureau of Labor Statistics, uses in their jobs reporting modeling. And from this one component, it will likely help job growth figures. I do want to say this. Last week, there was a huge revision down. It's kind of like already been put out like by some stories. But there was a huge revision downward to all the job growth, and it was because of modeling. And so this is a new sample thing, so we do expect that the models will be maybe more closely to reality. We'll see. Continuing claims, which measures individuals continuing to receive benefits after their initial claim, rose 4,000 to 1.863 million, still hovering near the highest level in almost 3 years. This metric continues to show that once someone is let go, it's harder to get a job because of less hiring. Bottom line here, gang, is both initial and continuing claims have trended higher this summer when compared to the start of the year, and with continuing claims topping 1.8 million each week since the start of June. This shows, of course, the pace of layoffs over the last 2 months has picked up. At the same time, employers have slowed down hiring. Family hack of the week, and this one's all about August 31st is National Trail Mix Day. Who knew? And so if you'd like to find out about this recipe for pumpkin seed cherry trail mix, courtesy of the Food Network, go ahead and check out the video on screen. Around the 14-minute mark, you can check out the recipe as it goes across screen here, and see if it's you all fancy. See if you like that cherry trail mix courtesy of Food Network. Here's what we're looking for this week, gang. There is more housing news, of course, starting with appreciation data from June from Case-Shiller and the Federal Housing Finance Agency, also known as FHFA. That's tomorrow on Tuesday. July's pending home sales will be reported on Thursday. Also on Thursday, we'll see a second reading for the second quarter of the GDP. Remember, there's 3 readings for each quarter. This is the second reading for the second quarter for the GDP. And the latest jobless claims will also come on Thursday. Friday, end of the week, brings us the most crucial report for the week via the Fed's favored measure. Dun, 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 dun. You know it. It's called the PCE, also known as Personal Consumption Expenditures. It's what the Fed likes to see, what people are actually spending money on, to see if there's inflation there or not. And so that brings us to the end. Again, my name is Larry Bailey. Thanks always for listening. And again, don't forget to subscribe if you like what you're hearing. And check us out over at Mastering Encompass on YouTube, or if you would like more information about training for your users or your admins on the Encompass platform, head over to masterencompass.com. We'll see you there. Take care.